Hi, in today's video, we're going to wrap up our run through the risk factors associated with Chipotle as we dig through their 10K. Last time we went through about the first half of the risk factors. Today we're going to continue on with that. And the first one we get to today is one that I think a lot of people are aware of, and I would say maybe even overestimate as a risk factor. And that is the increase in ingredient and other operating costs. And the reason why I say a lot of people overestimate that is because to some extent, Chipotle can pass along those costs. Remember, as we built the model, the ingredients and other operating costs, paper, supplies, things like that, were about 30% of Chipotle's, 30 to 35% of Chipotle's costs. So if Chipotle can raise prices a little bit, they can offset a lot of the increase in costs from there. As a matter of fact, they only need to increase prices about 1% for every 3% increase in costs in order to cover that cost. So it's not as big of a factor, but it is still important. And it's important to note that we're not only looking at commodity costs, ingredients, paper, supplies, fuel, but also leasing costs and labor. And we talked a little bit about those in the previous video as well. We could also be adversely impacted by price increases specific to meats raised in accordance with our sustainability and animal welfare criteria. This is one of the things that I think is important. Is we mentioned before that Chipotle's Food with Integrity is part of their marketing campaign. It's part of their niche that they're using to separate themselves from some of their competitors. And part of the trade-off of that is the costs associated with it. So one of the things is they're working with a lot of smaller farmers. They're working with more strict standards as to how the meat is raised and produced and other ingredients. And that's going to pass on a little bit higher costs. So there are upsides if you're able to attract more customers or get customers to pay higher costs. That's a plus from a business perspective, but there's also some risks associated. And you're going to find that with most marketing strategies that companies pursue. Shortages or interruptions in the supply or delivery of ingredients could adversely affect our operating results. This is one of the things that if you eat at Chipotle regularly, you've probably seen from time to time where they may have a statement that they were not able to get their pork or their chicken or something in from their normal suppliers, and therefore that those products might not meet their standards. Now, I'll be honest, like I said, I eat at Chipotle fairly regularly. I have not seen these signs as often as I have at other times in the past, but that is a risk factor that can come up. So they have to be careful. We also have inclement weather, natural disasters. So some of this you're going to see that is pretty standard risk factors, and some of it's going to be very specific to the company. Our inability or failure to execute on a comprehensive business continuity plan following a major natural disaster such as hurricane, earthquake, or man-made disaster. Again, some of these risk factors I would argue are somewhat boilerplate. This is something that's going to affect just about every company. There's always a risk of these things. Most large companies have backup plans. Chipotle does as well. So they're mentioning that risk. As an investor, honestly, this would not be a high priority concern for me. Part of the reason is that a lot of companies are going to have plans in place and probably have some type of insurance in order to protect them from things like hurricanes or earthquakes or other disasters along those lines. Also, though, this is one of the reasons why diversification is important. These things do happen. You're going to have hurricanes, you're going to have earthquakes, you're going to have fires. Things that are bad outcomes are going to happen, and they're not necessarily predictable. So if you own one company and it gets hit by something like this, it can have a big impact. If you own 50 companies and one of them gets hit by this, it's not going to have a major impact on your portfolio. The next one is one that I think a lot of people overlook, but is really important to a company like Chipotle, which is building a lot of its story on its growth. One of the big arguments for Chipotle is that not only are their same store sales growing, but that they're able to open more restaurants, and that's going to continue to allow them to grow. So Chipotle is largely built not just on what cash flows they're generating today, but more on the idea of, hey, we're going to be able to grow these cash flows going forward. And a lot of companies have this growth story, and in many cases, it's a legitimate story. It's not something that's just being made up, but there are risks to growth. And one of those risks is that as you grow, challenges grow with it. So if you're arguing that one of our strengths is our corporate workforce, what happens if you have to increase your workforce by 50% or 100% over the next 5 years? You have to make sure that you're still maintaining that corporate culture, that the training process is good, that the hiring process is good, and that you're able to maintain that. It is relatively easy for a manager to maintain control over a 5-person work staff. It becomes a lot harder when you're controlling 2,000, 3,000, 4,000 different restaurants. And Chipotle operates 2,600 restaurants right now. So as they continue to grow, one of the challenges they're going to have is to be successful in keeping that growth on track. Growing too fast can be as much of a problem for companies as growing too slowly. Increasing impact of and focus on sustainability and climate change could increase our costs, harm our reputation, and adversely affect our financial results. Again, this is something that's probably impacting every company. Chipotle maybe a little bit more so because of their Food with Integrity program, their commitment to social responsibility. Those things are part of their identity, and therefore they're probably going to be held to a little bit higher standard than some other companies out there. However, this is something that is going to be part of business risk for just about every company out there. If we do not continue to persuade consumers of the benefits of paying higher prices for our higher quality food, our sales and results of operations could be hurt. I would argue that this is a relatively big risk factor. One of the things that has made Chipotle successful is their ability to convince consumers that their food quality is better, that their strategy for identifying their pork producers and their beef producers and all their ingredients, their process is cleaner, it's healthier, and it's better for the environment. And that's worth a little bit more. As long as consumers agree with it, that's a reasonable marketing strategy. One of the things I talk to students a lot about is the perception that maximizing shareholder wealth means ripping off your customers or making a bad work environment, not treating your employees well. And I think those things are blatantly false. A good company can do good things and get rewarded for it. And there's lots of evidence that that is the case. Companies that hold themselves to higher standards tend to produce better results from a financial perspective as well. And so I think that the Food with Integrity program has some risks associated with it, as with any strategy that a company incorporates. But one of the risk factors is going to be how well you're able to convince consumers that that is to their benefit. Consumers have shown a history of being willing to pay a little bit more for food that is perceived to be healthier and better for them and raised more naturally, and all those things that Chipotle argues is associated with their food. However, there probably are limits to that. Will I pay $7 for a burrito? Maybe. Will I pay $8 for a burrito? Will I pay $9? Will I pay $435? No. So there are limits to how high customers are willing to pay for that marketing perception, or food perception, or product perception, however you want to quantify it or qualify it, associated with the higher quality foods. We could be party to litigation or other legal proceedings that could adversely affect our business. Again, so could every other business. This is not something that I would spend a lot of time focusing on, but I would look through it real quick to see if there's any specific lawsuits that come up. So I highlighted here, for example, several lawsuits were filed against us in connection with malware that we detected in our payment processing network in 2017. I would argue that's probably not Chipotle's fault. That's just part of being a business. I don't see anything really significant there. They also have had a number of lawsuits alleging violations of federal and state employment laws, including wage and hour claims. Again, this is part of having 2,600 stores. When you have 2,600 stores, 99% of them are run extremely well, that still means that you're going to have 26 of them that are doing things they shouldn't be. And having 100% control is impossible. So any large company that has lots of different stores or different operations or things like that, they're going to have some lawsuits because you can't have perfect control over every single manager, every single person working for the company. And so that's part of having a business and expecting some of those lawsuits. A failure to recruit, develop, and retain effective leaders, or the loss or shortage of personnel with key capacities and skills. Again, this is something that is going to affect every company. I would argue that there are a handful of people that are extremely important within any company, but I don't think Chipotle has at least the reputation for having a single star that's running the company that's making the difference. It's not a Steve Jobs from Apple or somebody like that that is the leader for the company. So that can actually be kind of a benefit, but it's still a factor that companies have to worry about. How are we making sure that we're recruiting good people, we're training good people, we're developing the culture? Here is one that is probably a little more important. Our digital business, which has become an increasingly significant part of our business, is subject to risk. In 2019, 18% of our revenue is derived from digital orders. Again, I'm filming this series in the summer of 2020. We're still in the midst of the COVID-19 pandemic. And I would argue that in 2020, that number is going to be quite a bit higher. Digital is a huge part of Chipotle's success right now. One of the things that has allowed them to be successful through the COVID-19 pandemic is their ability to manage digital orders, delivery, pickup, things like that, that they're still in business, they're still serving customers, and their sales are doing reasonably well compared to a lot of other restaurants out there. However, there are some risks in there. There's lots of different delivery companies that are part of it. They've got to make sure that their digital orders get processed properly. Lots of risk factors to think about associated with digital sales. Now, I'm going to wrap up these last few pretty quickly because, again, some of the risks are very relevant to the company. Some of them are more or less what I would call boilerplate. We're subject to extensive laws, government regulations, and other legal requirements. Yeah, you and every other company. Now, they still want to list those, but these are all things that we've talked about before: the food safety, the employment issues, things like that. Economic and business factors that are largely beyond our control may adversely affect consumer behavior and the results of our operations. Health issues also. COVID-19, that is a factor that was largely beyond their control. I'd say Chipotle hit the ball out of the park with dealing with the COVID-19 pandemic. They were one of the more successful restaurants in keeping deliveries up, keeping operations up. So kudos to management on doing a great job with handling something that a year ago nobody was anticipating. So sometimes these risk factors may end up hurting the company. Other times they may turn out to not be as much of a problem as we anticipate. And a lot of that tends to do with how well the company responds to the crisis. Our quarterly results may fluctuate significantly, including due to factors that are outside of our control. Again, these are all things that we've talked about before. Labor availability, increase in marketing or promotional expenses, new restaurant openings. Market price of our common stock may be more volatile than the market price of our peers. If you want to know how volatile the market price of the common stock is, just do a daily standard deviation or a weekly standard deviation of returns and compare it to the peers. I don't think I'd be relying on the 10K to worry about how volatile the stock price is. Anti-takeover provisions may delay or prevent a change in control of Chipotle. I don't think too many people are buying Chipotle based on its takeover appeal. However, one of the reasons a lot of companies do incorporate in Delaware, remember I mentioned earlier about half of corporations do incorporate in Delaware. And one of the reasons is due to some laws in Delaware that deal with incorporation that tend to be more favorable to corporations. This is one of the things is anti-takeover provisions. And so if you're buying Chipotle, you may want to note that it's probably not going to be a stock that's going to get taken over, at least in a hostile takeover, anytime within the next year or so. That wraps up our review of risks. We're going to continue with the 10K going forward and look at some other issues that might pop up. Thanks.